Good morning, everyone. A warm welcome to the 28th Indirect Tax Colloquium, July 2025. I would like to introduce our speaker, Mr. Vivek Jalan, who is a qualified CA, MBA, qualified LLM, and LLB. He is the chairperson of the National Fiscal Affairs and Taxation Committee of BCC&I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write it in the chat box. We will answer all your queries at the end of the session. Now, I request Samir sir to say a few words. Over to you, Samir sir.
Samir, you are on mute.
Can you hear me, Vivek?
Yes.
Yes, thank you. Good morning, Vivek, and good morning to all the participants for joining us today. Uh, my name is Samir Singh, and I'm excited to host you today for this webinar. We have some interesting session lined up. Today, we are going to cover all the past 1 month, 1.5 months development in the GST. And as Deepa just said, this is going to be interactive session. So if you have any query or any doubt, you can just put it in the chat box. Vivek will take it up at the end of the session. So over to you, Vivek, to begin with the session.
Yeah. Thank you, Samir. And thank you to VILGST for partnering with us in this another colloquium. I think more than 3 years now, we have been doing this colloquium almost every 1.5 months. Thank you to Team Tax Connect who have worked so hard on this webinar. And most of all, thank you to all the participants for joining. I can see various of my friends also here from industry as well as the consulting space. Thank you for joining. In fact, we were thinking of having this webinar after the GST Council meeting this time, which was expected at least in June. However, now it is expected that GST Council meeting will happen only after the monsoon session of the Parliament in August sometime, possibly. So whatever developments are there, we will discuss, and I'll share my PPT and immediately start on each of the topic so that because there are a lot of topics to be covered today. Is my screen visible?
Sir. Yes, sir. Yes,
Yeah.
it is visible.
Thank you. So, thank you. Yeah, on your screen, we have so many topics to be discussed. And first of all, I have changed the seriatim of the topics which was circulated because a lot of good work is happening in the indirect tax space. Direct tax, of course, tomorrow or day after on the 21st of July, the new income tax bill with the select committee recommendations that will be tabled in the parliament. So a lot of movement in the direct tax space. But even in the indirect tax space, although we think that only after the GST Council meeting happens, so work is done. But there is a lot of work which is being done, and we have been representing, and most of the representations which have been made in the right spirit and the right manner to the right forum in the GST Council, in CBIC, even to the states, they are being accepted and implemented in a short period of time. So, ITC on IGST post-importation. We'll discuss on the reforms in the GST audit space. I think many of you over here in industry as well as in the consulting, you are bothered by this state-wise trial balance. So many documents required in the GST audit. So all of that is being worked out in the CBIC, and we had the various interactions with the the concerned officers in CBIC. So we'll discuss that. But on the ground, sometimes things are not as it is thought by the policymakers. So we have seen on 30th of June, which was the time barring period under Section 74 for financial year 18-19, for the show cause notices to be issued for 18-19, and bulk of show cause notices have come. So we will discuss on how to reply to those show cause notices. Mind that, friends, in the next, we'll also discuss on the GSTAT, that is the GST tribunal, which in the next 2-3 months is expected to see light of day. Already Uttar Pradesh and Bihar technical members from the center side, they have been already appointed, and already the GSTAT president is issuing orders for the anti-profiteering as a anti-profiteering cases. So GSTAT honorable president is at work. He and even the GSTAT would see light of day soon. So we'll discuss on how to file an appeal in the GSTAT. Mind that if you see the first, the GSTAT law, the relevant section and rules, it is said that while the GSTAT would follow the Code of Civil Procedure, but it will be guided by rules of natural justice, right? So natural justice in GSTAT, the tribunal, which sometimes we do not see at the adjudicating stage, but natural justice at the tribunal stage would be a very, very important, shelter for the taxpayers, and that needs to start from the reply to the show cause stages. So we'll discuss on this 30th June, the section 74, where it has been invoked for 18-19 cases going forward 19-20, how they can be best replied for genuine cases. Transfer of input tax credit from one state to other, or refund of input tax credit when the closure of business is there. That is a big issue deliberated in the GST Council also, and there is some movement in that. We'll discuss on the Sikkim High Court's judgment for refund of IGST, for refund of GST when the business in the state gets closed. We'll discuss on the GSTIT filing, and of course the SVB. Again, this is another place. The SVB matters in customs, right? The special valuation branch matters in customs, where import is done from related parties and valuation becomes an issue. The matters go on for months together, and it is a very tedious matter. So now, after huge representation by industry, in July, August, a circular would be soon issued as is expected. So all of this we'll discuss one by one. And as Samir has said, that I can already see there are few questions which has been there in the chat box. So you may keep on typing your questions. We'll take it up at one go. In the last 15 minutes, all the questions we'll answer at one go. That is the benefit of a live webinar than a video recording. So first thing first, major issue of industry. Now there seems to be a resolution. ITC on IGST paid for post-importation. So now in customs, there is post-clearance audit, which is happening across taxpayers and at a very fast pace. Even otherwise, it is seen many of the times that post-clearance, it comes to the fore during audit, assessment, etc., that certain IGST payment has been missed. Trade wants to pay off the IGST because it is a revenue neutral transaction for them. They will pay the IGST balance and take the input tax credit. However, what comes as a blockage is that this IGST credit may not be available as per the circular 16, right, of 2023. I think, yeah, 16 of 2023, because TR6 challan, which IGST is paid for post-importation payment, that as per this circular 2006 of 23, 16 of 2023 is not a valid duty taking document. So let us understand what is the law as it stands today. Let us understand the circular, and thereafter what circular or what relaxation is coming in the near future. In July or August, we expect that there would be certain relaxation in this space. So as per Rule 36, read with Section 16(2)(a), the duty taking document for IGST paid during import is the bill of entry or such other document which are issued apropos the assessment, right? So bill of entry or similar document prescribed under the Customs Act or rules made thereunder for the assessment of IGST integrated tax on imports. That is the duty taking document. However, TR6 challan is not a bill of entry. As of now, the system in the IGST and the customs do not support the amendment of the bill of entry or the payment of the IGST through TR6 challan through the bill of entry. Therefore, the litigation which comes up in this issue is that TR6 challan is not a duty taking document. Please go and get your bill of entry reassessed. Now, to get a bill of entry reassessed, you need to invalidate the out of charge document, right? And that is a huge process, takes 1.5 to 2 years. It is a fact that under Section 16(4), for bill of entries, input tax credit taken through bill of entries, there is no time barring period under Section 16(4). So for invoices, debit notes, etc., the time barring period for taking input tax credit is 30th November of the next financial year. So for 24-25, the time barring period for invoices and debit note is 30th of November 2025, right? But for bill of entry, right, in such cases, say for example, for bill of entry, there is no time barring period, right? So even if the bill of entry is reassessed and rectified, say in 2027, the law, CGST law says that input tax credit can be availed on that bill of entry. But again, it is litigative. Maybe in future, the department may litigate. And of course, it is a very time taking process. There is a cost involved also. And the cash flow is blocked because ITC is not taken. So what we have suggested to our clients is please go ahead and on the basis of TR6 challans, as of now, avail the ITC, but do not utilize it. So there is no interest implication. There would be a 2A, 2B and 3B mismatch, and that you can always argue in the higher forums on the basis of non-availability of the relevant machinery, right? So why this litigation is there? Because of this circular 16 of 2023, which says as of now, the ICES does not have a functionality for payment of custom duty on a bill of entry after giving out of charge to the goods, right? And TR6 challan is not a prescribed document for taking credit of the IGST paid post importation, right? So this is the circular 16 which is coming in the way. However, we could see on your screen there are even media articles in Business Standard that this had come some time back, that the government is going to come up with a automated technology mechanism where as it is there in the circular we just read, 16/2023, that there would be an automated mechanism where you pay the challan, TR6 challan, and it gets auto-populated in bill of entry. Bill of entry details get auto-populated in GSTR 2B possibly, and input tax credit can be availed. So for at least the periods going forward, we can see some relaxation in this mechanism. No need to get the bill of entry reassessed. Even if you go for section 149, this bill of entry amendment or rectification, that also is a near impossible task in customs as of now, because it is a completely manual driven process. So this we had represented from trade, and as I said, very good work is being done in the CBIC, and here we can see some relief coming going forward. Again, a second stage where we had interactions with the CBIC in trade forums recently is in the GST audit space, right? At least on the CGST side, right? So SGST, the respective states would do their reforms, and CGST is doing the reforms in the GST audit space wherever there is a CGST jurisdiction for the audit. So very recently, last week only we got one of our clients said they got a 5 years GST audit notice. 5 years, that is from financial year 19, 20, 20, 21, 21, 22, 23, 22, 23, and 23, 24. So the very fact is that for 19, 20, 2021, Section 73 already is time barred. So we put it up before the CBIC. Let's see, whenever you are raising a GST audit notice as on date for 5 years starting 1920, out of those 5 years, 2 years are already time barred as far as Section 73 is concerned. So whichever officer is doing this audit, there would be a bias, there would be a prejudice in the officer's mind that whatever issues come out for these 2 years which are already barred under Section 73, those issues would be raised under Section 74 and not Section 73. So in these type of cases, while the CBIC was non-committal, at least on this point. However, we suggest that in case any of your clients or any of you from industry, if you get this kind of notice, then you must always raise a protest initially while submitting the documents that there is a prejudiced mindset at the very beginning to raise the issues for 1920, 2021 under Section 74. Further, now brings us to the next issue, that in case for those 2 years, a particular issue. So for example, the audit officer finds a 2B, 3B mismatch in all the 5 years. It cannot raise a Section 74 demand for 1920, 2021 and raise a Section 73 demand for the other 3 years. So the audit officer, he would be prejudiced to raise a Section 74 demand even for the balance 3 years, where actually a Section 73 demand should be raised, right? So this you must, in case you get such a notice for 5 years, at this point of time, you must raise this kind of a protest and a submission at the very beginning so that it is on record. Mind that, friends, as I have said, that even the GST tribunal, it would always work, and the GST appellate mechanism would work under the principles of natural justice. While at the adjudication stage, we might feel that, okay, there is no rule of law. Sometimes there are no 3 adjournments which are granted. We have to go to the high courts. But as this law evolves, then rule of law, principles of natural justice they would be a very important determinant factor in at deciding the cases at the appeal stage. However, what comes into the way is that if at the show cause level or at the first appeal level, you do not raise these issues, then at the next level, going forward at the first stage or tribunal stage, then to get a relief on rule of law itself becomes a problem, right? So, what was otherwise also discussed, the reforms part in the GST audit space is that only 0.5% of the CGST taxpayers are selected for audit. And for MSMEs, there is an internal classification by the CBIC to audit the MSMEs with some relaxation. Now, on your screen, point number 4 is very important, right? Physical documents we have seen in certain states, even at the CGST level, documents, and we have given a note for at least 10 states to various trade bodies for putting it up before the CBIC. From various trade associations, we are putting it up before the CBIC. So GSTR 1 printout, GSTR 3B printout, GSTR 9, 9C. Why is it required? All of these are available on the GST portal. Then why should the taxpayers give a printout of such a huge volume of documents? This we have put up and the CBIC has accepted. They are in the process of sensitizing their officers to not ask for the physical documents. Even the CBIC has assured trade that the documents which are available on the other portals like MCA portal, any companies or LLPs, balance sheet, profit and loss account, etc., that can be downloaded. The master documents can be downloaded from the MCA portal, and there are other such portals. So the officers are being trained and sensitized, as we understand from CBIC, to download it from there and ask as little as document which is required from the taxpayers and which is available only with the taxpayers. So this is something which is going on, and slowly you'll see a lot of development in this. Now, this is a very important point number 5 on your screen. Virtual interaction. Say you have your head office at Chennai, right? And you are audited by CGST in Haryana, right? You have a head office at Chennai. You're audited in Haryana for your GST-IM of Haryana. Generally in GST, we have seen that all the compliances are centralized. So now generally what happens is that you take the help of some professional, maybe in Haryana, and sometimes everything is controlled from the head office in Chennai, and rightly so. However, for the finalization of the audit, the tax head or the company's personnel has to fly down from Chennai to Haryana, or in other states, in my example, in Haryana, right? So now the CBIC is sensitizing the officers that in case the taxpayers at the HO, they want a virtual interaction to be there, then the officers have to give the facility of virtual interactions, right? So this is very important. Another issue which was raised by us, point number 6 on your screen, is cherry picking. Now, many of the times we have seen that in case of one GSTIN of a taxpayer in a state is selected for audit, then all the GSTINs are selected for the same PAN number. So we put it up before the CBIC. From the trade, it was put up that is there any cherry picking? So they have very clearly defined that no, there is no cherry picking, and all the GSTINs are selected on the basis of risk-based criteria. Now, this point number 7 on your screen, this is a very, very important development. It is in discussion stages. So all of those who are from associations in this webinar, from companies, we would request that in case from all the associations, this request also goes. many of the times, I think most of us, right, we have seen, especially in case of CGST, that at the AC level, JC level, commissioner level, also sometimes everything is agreed, right? We put up our representations, they have an issue, we submit evidences, etc., etc. Everything is agreed, they are fully satisfied. However, the order ADT 2, which comes, that is completely reverse. And explanation given to taxpayers is, in the MCM, things went against you. MCM did not accept your suggestion. Even at the audit level, we have said that, okay, we are putting it up before the MCM. Let the MCM decide. So who is the MCM? MCM are a set of officers from the commissionerate, audit commissionerate, right? So now it is being deliberated. It is not confirmed that even in this MCM meeting, right, this committee meetings, which finally decides on the ADT 2, which is to be issued. So there maybe the taxpayers may have a say, at least a select taxpayers. However, as of now, the modalities are not complete as we are told. But if this be the case, then I'm sure this would be a big reform in the GST audit space. Co-audit of various states. So in case you have GST, CGST audit jurisdiction in various state, right? This rule 9610 will discuss. We'll answer you. Co-audit. In case you have CGST audit jurisdictions in various states, say you have a CGST. I'm talking only about CGST. CGST audit jurisdiction in, say, Maharashtra, Chennai, and Haryana. You have your HO in Maharashtra. Then you have the facility of making a request to the CBIC and to have a centralized audit in such situations. Now, very important on your screen, again, a big reform. The CBIC is sensitizing its officers. Many of the times we are asked for reconciliations at the audit stage, right? 2A3B reconciliation, e-way bill reconciliations, etc. While, of course, as a good taxpayer, we do submit our replies. Many of the times formats are provided to us to fill in. Actually, the CBIC is sensitizing its officers, and there are many high court rulings also that formats cannot be given to the taxpayers. If any reconciliation is to be done, that has to be done by the audit officers and not by the taxpayers. So the CBIC is sensitizing its officers in this regard also. And last, the biggest concern of the taxpayers, state-wise trial balance. While it is there in section 71, it is there in the law as of now. We have held it from the very beginning, right? So state-wise trial balance is required as of now, but it is also being deliberated. What we understand that the state-wise trial balances, that some alternative may be developed. As of now, also the section 71, it talks about state-wise trial balances or such other document. So what we do for our clients is that we have a statement of P&L balances. Balance sheet is very difficult to have state-wise, but of course P&L balances state-wise, that can always be prepared. So what we do at the 99C stage itself, when we are doing 99C, our start point is to have a state-wise P&L account, and in totality, all the states, they come together and total they match with the final audited trial balance. So, but the state-wise trial balance requirement, that is also being discussed, what we understand. So when we discuss on these reforms, we should also be privy, as we discussed, to what is happening on the ground. And bulk show cause notices were issued under section 74 on 30th June, which was the last date for section 74 notices for financial year 18-19, right? So in this space, friends, we need to understand the jurisprudence under section 74. Most of the times when we are drafting our show cause replies, right, under section 74, the reply to the show cause notices, we just mention at the end, section 74 should not be invoked, right? But why it should not be invoked? We have to be more serious about contesting on section 74 itself at the show cause level and at the first level, first stage itself. As I said, that GST tribunal would be guided by principles of justice, right? So these issues become very critical, and mind that many of the notices which are issued under section 74, they can either be quashed at the tribunal stage, right? Or at least there is a provision under section 75. We'll discuss section 75. Friends, if you are drafting a show cause reply, if you are drafting an appeal, we'll come to that when we discuss on the GST-AT draft of the appeal to be filed before the GST-AT. But whenever you are drafting even a show cause reply, please always go through section 75. It is a complete code in itself for natural justice, right? So now on your screen, this Calcutta High Court, in the case of Saha Distributors, I think very recently in the last week or last to last week, this judgment was delivered by the Honorable Calcutta High Court single bench, Saha Distributors versus DGGI East, right? So there was certain issue for input tax credit availment. There was a show cause notice and thereafter an order under section 74. So the taxpayer went up to the High Court and it confused section 16 with section 74. So it says that because section 16 is not applicable, 16 has been not violated by the taxpayer, it has taken all the precautions under section 16 for taking input tax credit. Therefore, it is not a case of fraud, willful misstatement, suppression with the intent of evade duty, right? However, section 74 is an independent section, right? Why? Now, the very important question is, why do you say that there is no suppression, willful misstatement, fraud, or misrepresentation? That is very important, that the taxpayers mix at the show cause stage, and that is what even the respondent, if you read this judgment, Saha Distributors, right? It is very important. It is reported by VIL in 744 CAL 2025, right? You read the whole judgment. The respondent, they took a point that, look, why the taxpayer has not taken the section 74 point at the show cause stage. It is taking it up now. It is only with the intent to avoid making a pre-deposit. And therefore, the court was also convinced, and therefore, this judgment was also passed accordingly. Now, in this light, friends, we already have, this is section 73. We would be getting on 30th of September, right? That is the time barring period on your screen. It is in round. 30th of September, you would be getting show cause notices under section 73 for financial year 21-22. And for section 74, you have already got on your screen on 30th June the section 74 notices for 18-19. 30th September, you would also be getting, possibly in case there is an issue, you may be getting a show cause notice under section 74 for financial year 19-20, which is the time barring period under section 74 for 19-20. So a lot of action you are going to see in the GST litigation space in July, August, and September, right? 30th September, 2 time barring, section 73 for 21-22, section 74 for 19-20, right? So section 74 is for fraud, collusion, misstatement, suppression of fact, or contravention of provisions with the intent to evade payment of tax, right? So various words. First of all, whenever you are replying, you have to define these words. What is fraud? what is collusion, willful misstatement, suppression of facts, contravention, right? Now, very recently, I discussed this in the last colloquium. You can go on to our YouTube channel and see our last colloquium. We discussed this Honorable Gujarat High Court's judgment in the case of Deepak Fertilizers, right? Now, yesterday I was in Mumbai and I was deliberating before the custom authorities. They also alleged under Section 68 of Customs Act that, see, you have created an offense because you let the goods expire in the warehouse. So we deliberated, Lordship, this is not a offense. There is a difference between an offense and a contravention, right? So you can take this Deepak Fertilizers case law, Gujarat High Court, to distinguish. Offense is with the mens rea. Contravention is not mens rea, right? So allowing a good to expire in a warehouse, that may be a contravention, right? You did not take action, but there may be a reason for a contravention, you can argue. Offense is very different. Offense is where there is mens rea. So what Section 74 talks about is offense, does not talk about contravention only. Contravention with the intent to evade payment of taxes. Friends, we always say that, oh, department has to prove offense. Department has to prove fraud, collusion, willful misstatement, suppression, right? But what about the taxpayers? Do you give evidences while filing a reply to your show cause? And do you take the point under Section 74, why Section 74 should not be invoked? Do you give some positive actions which you have taken to counter the invocation of Section 74? Generally, what we do, we just cite 3-4 case laws. But now on your screen, I would discuss 6 points, which in my mind, they are very valid points. There can be other points also, which should always be taken wherever Section 74 is invoked in the respective cases which may be there, right? So this 30th June, at least we have seen in many of our clients' cases, directly on 30th June, 5 show cause notices from 5 states under Section 74 for 1890. No DRC 1A. Friends, Rule 142, 1 capital A, right? That mandates, and I'm using the word mandate very responsibly, right? I will tell you why. Rule 142, 1 capital A mandates the issue of DRC 1 to issue DRC 1A, that is pre-show cause consultation, before issuing the show cause notice under DRC 1. If you are, so the word may on your screen, the proper officer may is highlighted in red. Before service of notice, issue DRC 1A, right? Now, many of the times the department, it takes the shelter under this may, that I am now duty bound to issue a DRC 1A, I can directly issue DRC 01. Friends, if you are invoking Section 74, you are alleging fraud. Is this not under the principles of natural justice to give me a pre-show cause opportunity to explain, at least on Section 74, right? In my mind, in such a case, at least in invocation of Section 74, the word may should have been read as shall. If by invocation of Section 74, DRC 1A pre-show cause is not issued, then when would pre-show cause be issued? Yes, if you have a GST audit case, then you have a ADT 2, which is already issued, right? So you can skip DRC 1A, which many states are doing. But when you are raising Section 74 show cause, no pre-show cause also, right? This, in my mind, would certainly be, contested and at least be considered by the various courts. Uh, in this case of New Morning Star Travels versus Deputy Commissioner State Tax, it was held accordingly. DRC 1A is mandatory. Also, in the case of State of Uttar Pradesh versus Joginder Singh, in the case of Board of Trustees, Cochin Port Trust, in the Kerala High Court, both of these are Supreme Court case laws. Kerala High Court, APL Limited, Private Limited, in all of these judgments, it is held that wherever principles of natural justice are concerned, in such cases, may should be read as shall. Very, very important jurisprudence, which is already been settled by the Supreme Court in certain laws, right? And in this case also, New Morning Star Travels, you can take the same case law for issue of DRC 1A. Second, extended period without proving the intention to evade tax. As I said, day before yesterday, I was in Mumbai arguing in customs matter, right? So the authority, the Honorable Commissioner, he told me, I said, sir, offense is different from contravention. I may have contravened, but I have not offended. I have not created an offense under Customs Act. So he said, see, even for contravention, even for offense, even if you murder, right? You may be always, you can always contest in the court. I said, yes, it is a fact that even if I murder, until I am proved guilty, I am not a offender. And that is exactly the decision by the Honorable Gujarat High Court in the case of Deepak Fertilizers, as reported by VILGST. You can take it from VILGST, Deepak Fertilizers, right? So intent to evade duty, that is very, very important, right? But that is for the department to prove. What do we say in our show cause reply? We should also say, we have got many show cause notice, 1 versus 3B, 2A versus 3B, 2B versus 3B, e-way bill versus GSTR, 1 differences. In such cases, we should also give a positive actions which we have taken, right? We should give positive actions which we have taken to prove that there is no misstatement by us. So, for example, we have forgotten to issue e-way bill, right? We should give reasons, at least bunch them into classes and give reasons that, look, it is for these reasons that maybe e-way bill was not issued. But is there an intent to evade tax? Had there been an intent to evade tax for the same transaction, why have I paid the tax through the invoice? You can also take shelter under section 126 for discipline to issue penalties in case they issue penalties in such cases, right? So not only the department, we always say let the department prove that there is an intent. We must give also from our part as a defense, if it is a genuine case, on what positive actions we have taken to prove there is no intent to evade tax. Again, deliberate suppression must be showed by the department. Pushpan Pharmaceuticals, it has held that if the department alleges that there is a suppression, deliberate suppression, it has to give evidence. But again, what do we give? We also, in our reply, should give the reverse. We should give what positive actions we have taken to prove that there is no intent to evade tax from the taxpayer's side. These, friends, maybe even if at the adjudication stage it are not considered, at least at the appeal stage, at the GST tribunal stage, these may be considered. Mind that even in case section 74, it gets, there is a provision under section 75. If section 74 does not survive, then the court, the appellate authority, they can remand it back for invocation of section 73. So even in that case, that there is a benefit for 2 years, right? So section 74 invocation in genuine cases, we must always, contest upon. Again, next, no fraud in case taxpayer honestly believes that there is no tax payable, right? So in classification cases, right? Or say, for example, I consider notice period pay, right? This liquidated damages is a big issue. In almost all the taxpayers, somewhere or the other, we take shelter of liquidated damages. The transporter, he has not delivered the goods. We deduct some money from the transporter and we collect some money from the transporter. We don't charge GST considering liquidated damages. Department says, no, it is in the nature of supply. Even if we apply circular 178, in the circular 178 itself, there is a para which is actually contradictory. So finally, even if we pay the GST on, say, a transaction which we thought was liquidated damages, even then, invocation of section 74, we can contest. CCE versus Indian Institute of Chemical Technology, right? We can say that, see, this is not a fraud. We have always you see, considered that this is liquidated damages. We have taken shelter under a circular issued by the council, circular 178. So in such cases, that there cannot be an allegation of fraud, right? If certain documents are available, classification cases, documents available in the public domain, I am continuously issuing invoices, I am filing my returns, considering a particular goods or service in a particular HSN code with a particular GST rate. After 3 years or 4 years, the department considers that it is a different classification, right? Maybe even if I admit that case, even then, there is no reason to invoke section 74, right? So we may contest accordingly. Admitted cases, as I said, right? So in one of our cases in Bangalore, so what happened that we in one of our clients, we admitted that there was some ITC which we had taken, and through GSTR 3B, we had utilized through GSTR 3B. So the officer said, no, you utilize it through DRC 3 and plow back that ITC in 3B. So we did that, revenue neutral transaction. And we saw section 74 being invoked for penalty. Absolutely covered under Universe Textiles, Supreme Court, right? Even if you are admitting a particular action which is revenue neutral, or even in other cases, does not go for invocation of section 74, even section 73, there is no case for invocation of a penalty. So section 74, why they invoke in such cases, where even when section 73 is live, because in section 74 there is a mandate of penalty of 15%, right? So that is considered to be arbitrage, and that is why section 74 capital A that has been introduced from 24-25. So in such cases, then you must take the you must argue section 74 vehemently at the show cause stage and the first stage itself. Next, transfer of GST input tax credit from one state to another and refund of GST input tax credit on closure of the business. Many of the taxpayers, they are grappling with this issue. You want to close down your business, specifically works contractors, as we know. You want to close down your business, you have your contract in that state has completed, you want to close down that business, but there is ITC, you have to continue that registration, right? Number one, for transfer of this input tax credit from one state to another state, we are representing from various associations, and many associations are representing this, right? And we understand that even it has been discussed among the circles in the GST Council, but as of now no relief is coming, but maybe going forward a relief may be expected. And all associations who are here, even in this webinar, maybe it is right time to represent on this, because this is becoming a big issue for trade. In one state, you have input tax credit balance you cannot use. In another state, you are paying through cash. We feel that this should not be the case because it is finally a one nation, one tax. And input tax credit, like cash balance, there was a time where cash balance was also not allowed to be transferred. Now that there is a procedure under PMT 09 to transfer the cash balances, similarly, ITC balance also should be allowed. But that being the case, there is another issue. I want to completely close down my business. I am registered in only one state. I want to completely close down my business. But I have input tax credit, say on capital goods. My business did not go well. Capital goods was purchased by me. Even I am selling those capital goods at dirt prices in the market because I want to exit. What about the input tax credit? Should I not get the refund of the input tax credit? Well, you may have all gone through this judgment in the case of SIPCA India Private Limited, where it was argued by the Honorable Council that under Section 49, subsection 6, after utilizing ITC and cash ledger balance, the refund should be granted. However, under Section 54, subsection 3, refund can be granted only on zero-rated supplies or on inverted duty structure, right? However, the Honorable High Court, Sikkim, it has held that because under Section 49, subsection 6, there is no bar for taking the refund of ITC not utilized, even though it is specifically barred under Section 54, subsection 6, 3. But the government cannot be unjustly enriched under Article 265 of the Constitution, and it cannot retain the tax without the authority of law. So this is a very important judgment. It has followed the principle envisaged in Slovak India Trading Company Supreme Court's judgment, right? It originated from Karnataka High Court, and Supreme Court also dismissed the revenues appeal, but it was in the Senvat regime, right? Earlier regime. In GST, this is the only jurisprudence which has developed in this space as of now for refund of input tax credit if you close down the business in one state. However, this judgment is so this judgment is the first such judgment by the High Court and a single bench of the Honorable High Court. Possibly the department would contest it at the larger bench, and possibly now the department would also contest taking the cue from the judgment of the Honorable Supreme Court in the case of VKC Footsteps, where the Honorable Apex Court has held that refund is not a statutory entitlement. It is not a constitutional right. It is a statutory entitlement, and the scope of refund under Section 54, subsection 3 cannot be enlarged. So, some way to go, right, in this space, but we feel at least a start has been made, and maybe this jurisprudence would evolve further. But yes, transfer of ITC from one state to another, there I think a lot of representations have already been made to the government, and possibly going forward, we can all hope that something comes up. GST compliances is going through a major change from August 2025 for filing GSTR 3B for the period July 25. So what is coming? We all know hard locking of GSTR 3B liability side which is auto-populated from GSTR 1. So now, once you file your GSTR 1, then you cannot amend the respective liability in GSTR 3B. It can be done from 11th to 20th of the next month only through GSTR 1A, right? That is what is coming. And simultaneously, we all are seeing invoice management system, while not mandatory, but it is also evolving, right? And going forward, invoice management system would also become mandatory. So friends, what is very, very important is that after filing of the returns, we must do a sanitization check of the returns itself, because with so much of automation which is coming in and so much of risk which is increasing in the GST compliances, government using artificial intelligence tools, certainly even if we miss out in a huge volume of and crores of value of GST output liability and input tax credit, and even if we miss out something, it may result in huge demand. Therefore, what we recommend always is to have a sanitization check of your return. And why so? You see, let us come to one by one issue. So in case you have filed your invoice and credit note in GSTR 1, but afterwards, and there are valid reasons. I'll give you an example of this. Afterwards, you find your invoice has to be downward amended, or you find your credit note has to be upward amended from the outward suppliers part, which means if your invoice is downward amended or your credit note is upward amended, which means the GST liability would go down, right? And it would all be tracked in GSTR 1A. Certainly when the GST liability is going down, it will result in some kind of questions from the department. Why it will come down, the GST liability, why you need to downward amend your invoice or upward amend your credit note. I will give you an example. Say, now what is the solution or machinery as of now, specifically in the e-invoice era? To amend your invoices after 1 day, 24 hours. E-invoices after 24 hours, it cannot be amended. So if your customer does not accept certain goods, then you need, or services, after you have made your e-invoice after 24 hours, what machinery do you have? You can only issue a credit note, right? Now you issue a credit note as well as a invoice. Both get auto-populated in the customer's GSTR 2B. What customer does? It rejects your credit note. That is the most logical, because the moment it, as of now, does not take any action on your credit note, then it has to reverse an input tax credit which it has not taken itself, right? So it will reject your credit note. And it has already happened in many of the cases with many of the taxpayers. But what it will do with the invoice? It may keep it pending, right? The invoice, the customer will keep it pending or show it as a temporary reversal under Circular 170. But credit note, it will reject. So what will happen? Your liability increases from the value of the credit note. But your liability is already there to the extent of value of your invoice. So in such case, what do? There is only, you cannot pay double tax where actually there should be no tax. So actually you amend your credit note as well as, so credit note already you amend, and as well as your invoices you amend through GSTR 1A. That is the only possible solution which we are seeing now. So in such a case, there would certainly be a inquiry from the department, and in such a case, you should, as from now, have it in your GST sanitization. This sanitization cannot be done after 15 months or 1 year, because at that time everybody would have forgotten the things. So we feel that GST sanitization post the filing of the returns, this is very, very important going forward, right? Okay, few amendments which are going to come. We have been always asking the GST network that even for credit notes, it is not practical to not have it, keep it pending. So going forward, the GST network has confirmed that they would be issuing the utility where even credit note can be kept pending. Say your supplier has issued a credit note on 31st of July, you received it on 1st of August, right? In such case, you have to keep it pending in the month of July, right? So they will allow you to keep your credit note pending for 1 month, that we are informed. However, this will be with a interest implication, as I had deliberated long back in one of the colloquiums. So credit note is very, very critical, even though it can be kept pending now, what we understand, but it will be with the interest implication on both sides. If you as a customer keep credit note pending and reverse your ITC after 1 month, interest. If you reject the credit note after 1 month, the supplier will have to pay interest on such amount of output liability, which it has got it increased. You can also write comments now in your IMS. What we are told that there will be facilities to write comments for the actions you are taking in the IMS. Which brings us to the next topic, preparing for GSTAT filing, right? And sample GST appeal format, right? So we will discuss on the salient features which you must take while you're filing your GSTAT appeals. We will also discuss on the utility, on the whole note which has come, 150-page note, which has come for filing of the GST appeals, right? It will be a complete online mechanism for filing the GSTAT appeals. We will discuss on that on 30th July. Friends, you will get intimation from us. On 30th July, we may be doing with the CBIC webinar on the filing of the GST return. Now that this utility, the whole process flow for filing has come, but we will discuss in this webinar a few of the processes which you need to follow while filing the GSTAT appeal online, right? So, additional evidences before that, Rule 112. Friends, this Rule 112 is very, very important. So we have argued, all of those who have argued or seen CGST, right, in the earlier regimes, Central Excise, Service Tax, even the ITAT in the states, the tribunals for VAT in the states. You cannot induce a fresh evidence at the tribunal stage directly, right? Until unless you have taken up that ground at the adjudicating stage or at the first stage. In case you want to take a new evidence, a new point at the tribunal stage, you have to prove that the adjudication authority has refused to admit your evidence. You should have sufficient cause to prove that you could not take that evidence at the adjudication stage or at the first stage. So that cause you have to state. So in one of our matters very recently, the first stage authority, they refused our petition on the corporate guarantee issue, right? So corporate guarantee, the circular is very, very clear that even if you do not issue an invoice, the value would be deemed to be nil. Circular 199 is very clear. However, we contested, we had already issued invoice for corporate guarantee for point some percent, 0.1% or something. So what did we do? We did a 161. right? 161 for rectification of that order. Because this circular is very apparent. Let the authority refuse my 161. At least at the tribunal stage, I can state that, Lordship, we have taken all the measures at the first stage, adjudication stage. We have even asked the authorities to rectify their orders, which is very apparent from record, and the circular, which is binding. So 161 we have taken at in this stage, and therefore, this is very important that at the adjudication stage, appeal stage, even if you have not taken evidences, 6 months time you have, do a 161 and take up that matter. Even if the matter is rejected at the 161 stage, the rectification stage, at the tribunal stage, you can say that I did take all reasonable actions to get the evidence admitted, but that evidence was not admitted, right? At least you would get a remand back. A very, very important stage. GSTAT is a very important stage. Why? Because GSTAT can remand back the matters. First stage authority in GST cannot remand back the matters, but GSTAT can. Section 109(5) is very important. If you have a place of supply dispute, it can only be filed at the principal's bench. I will show you that there is a specific place in the utility on the GST Appellate Tribunal website when you are filing your appeal, where you have to state that whether any one of the point is place of supply issue. If even one of the point is place of supply issue, then you have to go to the principal's bench. You cannot go to the state bench. So this place of supply is very important. However, we have one more point. While in case of place of supply, you can only go to the principal bench. But what debars you from going to the principal bench? What debars you from going to the principal bench where even place of supply matter is not there? That we have to see going forward, right? As this appellate tribunal space evolves in the GST front. Points to remember while filing the GSTAT appeals before the GSTAT, do take the limitation clause under section 73 or 74, right? As we have discussed, I will not go again on that. Invocation of section 74, we have discussed. Section 73 versus section 74, we have discussed. Even if you can get a section 74 converted into section 73 by applying section 75 too, even then you may get certain relief for the taxpayers in genuine cases. As I said, friends, section 75 is very, very important while you are filing the appeal before the appellate tribunal. Rule of law. Even circulars can be challenged at the GSTAT, while at the first stage, generally when you challenge the circular itself, that is not accepted many of the times. But at GSTAT stage, you can argue Supreme Court judgment in case of Vatika Township that circular is binding on the officer, not binding on the taxpayer. So this circular for 2A, 3B, you get a declaration from the CA or the counterparty, credit note circular. So very interesting. I was arguing one matter on circular 212. For the credit note, I need to get a CA certificate from my customer, right? So I said, see, before circular 212 was issued in 2024, I had no machinery. I didn't even know that I have to my credit note other than on discount. If you see section 34, that is amended right now, and not even amended, not notified after this Finance Act 2025. So I said that see, section 34 only did not oblige me to, or mandate me to take a declaration. Only after circular 212 has come, a declaration is there, that also for post discount cases. So this circular 212 should not be made binding on me, right? And we requested the authority that Suncraft Energy Supreme Court is before you. Please get inspection done to my customers whether they have reversed the ITC. I am trying to take a declaration from the customer, but if that customer is not replying to me, then you as an authority should always apply the ratio of Suncraft Energy Supreme Court, get a verification done, and rather than casting a demand upon me. So all of these circulars can also be contested at the GST appellate stage in case you see a doctrine of impossible performance, doctrine of impossibility, doctrine of bias we just discussed. All of this can be argued before the GST appellate tribunal, right? Doctrine of prejudiced mindset, right? Doctrine of bias, that is to say, which we discussed some time back, right? As I said, section 75 is a code in itself, right? You can, so one of the matters, Madras High Court, Exide Industries Limited, the officer did not allow a adjournment. Madras only on the basis of section 75. It was argued and the matter was remanded back, stating that non-granting of adjournments in GST, non-granting of even 3 adjournment in GST is against section 75, and therefore the officer must give an adequate opportunity of being heard. Section 75(7), show cause notice cannot, the order cannot travel beyond the show cause notice. A very important principle enshrined. If in the order you get a completely new point, which was not there in the show cause notice, very opportune point to get it dropped at the tribunal, applying 75(9). Right? 75(7), sorry, 75(9) talks about the interest which is applicable. Revenue neutrality can be also argued at the tribunal stage. Show cause notice cannot be prejudged, right? Many of the times in the show cause notice, we get a statement in the show cause notice which requires us to pay the tax. That is prejudging the show cause notice. Doctrine of bias can be argued. Speaking order, right? All of this at the adjudication stage, we feel that these will not be heard. But section 75(6), you can always argue on 75(6) in case you do not get a speaking order on each and every point which you have argued, right? No din, show cause or order is invalid, and as I said, 75(4) can be remanded back to make it into a 73 matter apropos section 75(2), 3, and 4. Yeah. So GSTAT industry preparedness, we have discussed this. You can go through our YouTube channel. We have already discussed. Very important is to get your petitions ready for filing before the GSTAT, because you will get only 3 months. And the GSTAT can only adjourn the matter on sufficient cause being shown for 3 more months. So 3 months for filing. Adjournment may be a problem in GSTAT. Be aware, if the department files an appeal against a favorable order, you have the opportunity to file a memorandum of cross objection within 45 days, right? And all of this will be through the GSTAT portal. I will show you on the GST portal just an understanding. 30th July, we are having this webinar. You will get the intimation. We'll discuss in detail. Just I will give an understanding now on how to file this memorandum of cross objection. There are particular utilities at the GSTAT website. You have to file it in APL 05, additional evidences. You have to put it up on the tribunal. So you can go through this at your own pace. You can go through our YouTube channel also. We have discussed it there. I will not repeat. Yeah, certified copy of the order. When you are putting in the, and very important, I will go, let us discuss this when we are discussing the GSTAT website. There is a checklist in the GSTAT website itself, which takes you through, okay, whether you have filed all the documents or not, right? So that is a very unique thing which has come in the GSTAT website. So you have to pay the fees. Maximum the fees is 25,000 rupees for filing the appeal. Rectification of orders, you do not need to pay any fees. Okay. A4 size paper, double spacing. Be very careful while you are filing before the GSTAT. It is not an adjudicating authority or a lower authority or even the first stage. It is a court, and therefore we have to be careful while filing the appeal. We have seen many of the times in income tax appellate tribunal that the members are very, very ruffled when the counsels are not rightly dressed. They make a very shabby representation. The papers are flying here and there. So you have to be very careful. Use the right font. Use the rules will state all of the font, etc. All of that is stated in the rules. Please follow the rules. GSTAT rules, they are very comprehensive. It do not make your petition look very shabby because it creates a bad impression on the member. Multiple orders. So one appeal for one order, right? That is the principle. So this is the GSTAT website on your screen. What is very important as of now, please register. You should register as a taxpayer. Those of you who are the authorized representative, you should register as a authorized representative, right? So here on your screen, again, you can see you have to choose your type. You have to choose your type: taxpayer, tax official, AR, advocate, or any other. So accordingly, you have to register. So please register first. Thereafter, this kind of dashboard will come, right? I will go through some of these here. Appeal filing, right? You can see on your left, on your screen on the left, appeal filing, right? So you have to click on appeal filing for filing of the cases. ARN number, if you have an ARN number, you have to file with ARN number. Even if you don't have an ARN number, you can file. I will show you, there is a drop box. If you don't have so if you have an ARN number, just put in the ARN number and the order will auto-populate on your screen. This is how order will auto-populate. Appeal filing. Okay, so this without ARN also you can file, right? I'll take 5 more minutes. Samir and Deepa, I know time for question answers has started. I'll just take 5 more minutes. Order details will come, right? So you have to, you have to just follow the workflow. Adding the respondent. So the moment all of this is complete, you can add the respondent and save it also. Demand details will come. So you have to fill in the demand details, right? Maybe auto-populated from that. Also, in case you are entering it manually, then you have to put the demand details manually. If you have an ARA number, will auto-populate this entire sheet on the demand details. You have to pay the pre-deposit and the court fees through the GST Appellate Tribunal website. So already most of you would have paid this 10% after circular 224, right? So that has to be adjusted through DRC 3A, right? So all of this is there. This is how you upload. Okay, now this is very important. How to upload the documents. And this is the checklist which I was talking about. See, all of these, you have to select yes, no. Has order appeal against been uploaded? Self-certified copy. You have to say yes. Has the order passed by the proper officer? Have the issues been disputed before the tribunal been clearly stated in the present appeal? So this is a unique checklist of 15-20 points. This actually acts as a self, self checking of whether you have rightly filed the appeal or not, whether you have put in the grounds, whether you have taken the facts separately, etc. APL 2A, right? After you do all this, you have to accept, verify through APL 2A. It will all auto-populated. Now, this is very important. What is the file size? We have seen in faceless assessment in income tax, so much problem. So the file should be uploaded in grayscale with 300 DPI. You can ask your IT heads, they will guide you. Maximum 300 pages per file, not more than 50 MB per file. Physical file submitted and online file submitted should be identical in volumes and number of pages, right? So again, you can add the documents, but if you add additional documents, you have to that if there can be more 100 pages maximum. Again, my appeals, after you file the appeal, you can go to my appeals and you can see the status of all your appeals. There is a dashboard. It is looking more like a ASP GSP dashboard. It is so well made. So I think a lot of work has gone before we in this developing this website. So this is a small synopsis of how to file the appeal. And last, I would take up this SVB cases in customs. So there are many issues in SVB cases. We know special valuation branch. In case you are importing through goods from a related party, then valuation is an issue and your case is transferred to SVB. It is like a transfer pricing case in international taxation. So you have to give on evidences. You have to give the royalty agreement, license fee agreement. If the value of the import is not suppressed, you have to give technical agreements, etc. In the last colloquium, we discussed on Coal India Limited judgment. Honorable Apex Court has held, even in case of a PSU, that of post-importation activity, that has to be added in the valuation. So in case of SVB cases, it takes eternity. And this extra duty deposit of 1% or 2%, 5%, you have to deposit a EDD, extra duty deposit, and there is no mechanism to finally adjust it to the with the value of investigation. Procedurally, it takes a lot of time. They keep on asking the document for the comparatives, etc. So all of this is a problem in SVB. And as I discussed, even in July and August, we get an information from that SVB cases also, they are targeting to bulk clear the bill of entries in SVB cases. Per bill of entry, all of this harassment should not be there. So a tech mechanism for handling SVB cases is going to come out, and also all the pending SVB cases for all of those who are grappling with SVB cases in customs, all the SVB cases, it is expected that the government is coming out with a SOP or a circular to clear them in 2 years' time. So yeah. So this is it from my side, and we'll go to questions. Okay. Maybe I'll take 15 minutes more. So Mr. Manoj says rectification appeal application filed with JC appeal is still pending for disposal. How can audit division can initiate for disputed tax amount recovery by way of DRC 13 bank attachment? If the audit division has started a bank attachment that is really disproportionate, you must raise a protest. But again, Mr. Manoj, audit division will not raise, what I understand. The commissionerate may raise, because rectification and the filing of the appeal with the requisite pre-deposit, they are mutually exclusive. It does not your time barring period of appeal, if that has elapsed, the department can go for a recovery pending rectification also. If the order is rectified, then the appeal effect will be given accordingly. That is our understanding. 161 and this 107, these are both mutually exclusive. Mr. Bharat says, query not related to today's topic on RBI circular October 22, when ARC company to charge management fees to the trust, which was earlier billed to investors. RBI circular trust can take all the expenses from redemption, my query. You can raise this separately, you know, this is a FEMA query. We can take it up separately on this 2022 circular, right? So yeah, Mr. Bharat, you can take it up separately with us. We'll discuss it when we are discussing FEMA in the next webinar. Mr. Haribabu say we want to know the responsible person in IGST for resolution of technical issues. We have been lodging grievances which are closed without resolution. This is particularly in case of IGST refunds, where shipping bill is validated without any error, but the same is not getting included in the scroll due to apparent technical issues. So responsible person in IGST, you will get it in Chennai, right? So Chennai is the IGST office. Now you have to get the information of that officer in Chennai only from the help desk. But yeah, in Chennai you have. So we had a similar issue where one of our registrations was cancelled. We went to Delhi GST network. There was an issue. The officer also could not reopen our registration in Chhattisgarh. So we went to GST network. They guided us to Chennai. In Chennai, we met the concerned person, although it was a task to get the officer's details, but thereafter finally it got resolved. So that is to answer your query. Is it mandatory? Mr. Lahiri says it is. Is it mandatory for details of bill of entry, IGST or import to be shown in 2A since 16 or 37 mandate appearance of details of invoice and debit notes only? It is silent for bill of entry since supplier in case of import is a foreign entity and cannot file its return. In case of failure of IGST, can an RTP be penalized? Yes, Mr. Lahiri, you are absolutely correct. RTP cannot be penalized for a glitch between the IGST and the 2B, but at the adjudication stage, it is a task to get it through. So, you know, finally, you can always contest this, but finally, your management would want a relief rather than a order and pay deposit. So, what we suggest always and what we do, if there is such kind of technical glitch, first of all, after filing the return, we raise a query and a issue, a grievance on the grievance GST, this email ID and the corresponding the numbers. And also we raise the grievance along with a copy of bill of entry. And therefore, thereafter, it is dropped at the adjudication stage. Even if it is taken up at the adjudication or audit stage, we show the bill of entry. If it is appearing on the IGST, then no problem. Even if it does not appear on the 2B, appears on the IGST, that no problem at all. The officer, you must raise a grievance and show the screenshot. I don't think the matter will be pursued further by the GST authorities. Now, to take from this query, friends, now, you see, GST will take few more years to evolve, right? More further, specifically because of the federal structure of our country. So in one of the cases, one very, very large company, they got a matter closed in SGST department. Thereafter, CGST raised the issue on the same matter, right? And they were ready to contest. So what I suggested to them, why don't you go and meet the CGST officer? Because we have been assured by the CBIC, by the principal chief commissioners in the grievance redressal committee meetings that see, in case you have a duplicacy between the SGST and CGST, bring it to our notice, we'll get it, dropped there and there. So rather than contesting, I would suggest always that no, it is better to take it up with the concerned officer. Possibly there is a resolution in genuine cases which you can get. Mr. Haribabu says for bill of entry, Maharashtra AR has ruled that limitation will apply, need to be contested. Of course, absolutely, it needs to be contested against the law. As I said, the department might litigate, but it is not the right position as per my submission. Mr. Joshi says if we take IGST credit on import based on DR6 challan, don't want to utilize it, how can it be done? portal first utilizes IGST to pay off the liability and it should be zero. How can we mitigate the risk? So there is a circular also that ITC has to be taken as a whole. Even if it utilizes your IGST, keep C and S balance there. The circular is very clear for ITC utilization. I, C and S has to be taken as a whole. So no problem in that in my view. Mr. Nilesh says, is the audit related sensitization being discussed, communicated through some internal? No. It is not through some internal circulars. This we have interacted with the authorities, and we come to know through trade associations that all of this is being discussed. And all of this sensitization is being done. If you go to the department also, the principal chief commissioners in the grievance redressal committee meetings also, they discuss all of these matters on ground also. In fact, very recently, if you ask any officers, there was a particular program for all the officers, adjudicating officers, superintendents, etc., that how to bring it a attitudinal change towards the taxpayers, right? So if you discuss with the department, all of these come out. As the state officers, field formations generally tend to work as per the whims and fancies and ignore the CBIC. Your query in parts, yes, CBIC guidelines are not applicable on state officers, but you see, our experience across India has been, of course, there are certain glitches sometimes, but if you take it up through the right forum, even the state officers most of the times are reasonable, but yes, experiences can differ. Mr. Sunil says Rule 9610 is omitted charging IGST on import under advance license, claiming refund even though no GST is paid on inputs. Isn't this treated as double benefit or is it fully allowed now? So Mr. Sunil, as of now, it is retro, it is only prospective amendment is there, but there are judgments across. Even day before yesterday, there was a Mumbai High Court judgment. All high courts are now ruling primarily in favor of the taxpayers, that since there is no saving clause in 9610 cases, therefore it would be considered to be as retrospective. 9610, what we got, we pursued these matters with various, with the council also and the commissioners also. And it was widely deliberated that this is not a double benefit and this 9610 should go. But since there are many pending cases, that they have done it as of now only prospective. But in my submission, of course, 9610 is not the correct position even by the GST Council. I might humbly say, it is not a double benefit and it should go. So my view, yes, should be contested. It is a genuine case to contest. Mr. Murali says procurement under concessional rate 0.1% of GST and cess and export on payment of IGST allowed. I think it is allowed, Mr. Murali, but the nuances. Okay, so 0.1% this merchant export, you are paying, you want to pay it on payment and get a refund. Refund, yes, you can get of this 0.1%. Whether on payment, without payment, that has to be seen on the portal. Mr. Sheru Khan says, is there any mandatory time gap between pre-notices and SCN under section 74? No, but there has to be a pre-SCN. That is my view. Mr. Bhutra says, can section 71 on any other section be read to say that there is a mandatory requirement for preparation of state-wise trial balance? I believe Madras High Court in Ingram has held that there is no requirement of state-wise trial balance. Yes. So you are right, section 71 cannot be invoked in other section 65, etc., etc. But as of now, it is a deliberation at the top level, what we understand. They are taking cognizance of this Madras High Court judgment also, but yeah, as of now, the corresponding relaxation is being discussed. That is what we have understood from our various interactions. Sir, SERA Audit, Director General of Audit Central initiate audit under Section 74 on suppression of fact for 2A ITC mismatches for period 1920, even though final audit report received for the same para or submission I can refer to. Yes, of course. SERA, I mean SERA means SERA cannot audit you. SERA will audit only the department. Now, SERA, apropos the SERA's issue to the raised before the department, they might have raised before you. But if it is already settled in FAR, then a similar matter which is already raised at FAR level cannot, in my view, be taken up in Section 74. But again, the nitty-gritties of the case need to be seen. Yeah, we'll share the PPT with all the participants, Mr. Shroff. Mr. Haribabu says if two GSTIN in the same state are to be merged, whether finished goods and spares are to be transferred by raising tax invoice, some procedure needs to be introduced on this issue. There is, see, if there is a merger, I think ITC 02 is the machinery, right? Why should you transfer finished goods? If there is a merger, then ITC 02 is the machinery. Mr. Vijay Khan says currently in cash ledger balance PMT 9 transfer the amount on different GSTI and tax amount unable to transfer. Why? I think PMT 09 is working. So you may have to check it. We have done many PMT 09s. I think it is working smoothly. Maybe there is a glitch somewhere. Mr. Sambamurthy says, what is the implication of hard locking on IMS 3B when IMS is also on the way? So we had discussed, no, Mr. Murthy, you know, that where invoice has to be amended downward, where credit note has to be amended upward, there is a corresponding reversal of output tax liability or reduction of output tax liability. Mr. Paul says, where have to report RCM if 3B is locked? No. So 3.1.D, table 3.1.D for RCM, that is not hard locked, but auto-populated from GSTR 2B. Mr. Sambamurthy says now GSTR 1 will be auto-populated in 3B outward side. Recipient takes action on IMS which will add to 3B output side. 1A alters the action on 3B. What is the real implication of hard locking? So they don't want so whatever you declare in 1, they say that that if you that is the liability. If you want to amend it, then you have to separately disclose it, right? So that department can get to know of it, you know, at ease. So the intention is very clear. Whenever you make a e-invoice, right, it goes to your 3B and the liability is frozen, right? Practically, this is what. So in, you know, if you can see, we are discussing on this 8 years of GST with Hindustan Business Line, right, on the podcast. So I said, see, in Central Excise Service Tax, department knew the liability after 3 months or 1 month, right, or maybe 40 days. Today, the moment you make the e-invoice, department knows your liability. Now, if you have to amend, then there is a whole process, and of course there will be a scrutiny action. So department, the government wants to track consumption in the country. That is the whole idea which I feel behind this. And rightly so. If we as a country has to grow, in my view, of course, there might be different views. We must track the consumption and ensure that the exchequer get its due value from the consumption in the country. Due to hard locking of 3.1 in GSTR 3B, due to rejection of credit by the supplier, amend the invoice value of G in 0 in 1A is correct process. Mr. Vijaykant, I cannot say that making the invoice 0 is a correct process. I would say this is the only option which is available, because certainly your company, the taxpayer, the finance department will not allow you to pay a double tax where actually there is no liability, right? So I think this is the only option which I can see. As of now, we have raised it before the GST network. Let us see in case they come out with any kind of solution for this. Okay. Mr. Chiranjeev Ji says, is it mandatory to produce declaration CA certificate against credit note issues to customer regarding reversal of respective ITC by the customer? So as I said, this circular 212 is not binding upon the taxpayer. It is binding upon the department. Number two, before this 2024 circular 212, we can also always argue there was no machinery with the supplier to ensure customer reverses the ITC. Now that officer, where I was arguing this case around 1 week back, officer says, see, the in section 34, it is still there that the unjust enrichment should not be done. The incidence of tax should not be passed on. So that mandate. So I said, ma'am, it is just the opposite, right? Unjust enrichment. The provision under section 34, which is present as of now, and it is present since 2017, is in B2B cases. Unjust enrichment is not the case, because the incidence of tax is not passed on. It is the tax is taken as an input tax credit. It is an asset in the balance sheet, so that the incidence has not yet passed on. Okay. GST department issued an audit for 1920 to 23-24 at one go now. Can we take the plea time barred? So asking for audit are against natural justice. So as I have taken the same stand. You should not deny the audit, because there might be certain issues which they might genuinely come up under 74. So they may take the point that there might be some genuine matters. But you should always, in my view, that this matter should be brought up at the very beginning of the audit, that a prejudiced mindset, which is not possible under the doctrine of bias, that should not be there. So in case a section 74 is issued, which should not be issued, then that can always be contested going forward, that we raised our process in the very beginning, protest in the very beginning. We should be a PPT. Yeah, video will be uploaded on our YouTube channel. It will be there in VILGST also for VILGST users. Mr. Rajmohan says, if audit is issued for 1920 before 31st May, audit proceeding did not conclude till now, can we refuse to provide further information? See, Mr. Rajmohan, it is not time barred under section 74. Until it is time barred under section 74, in my view, you must provide the documents. But of course, if you have to take a further more stronger stand, you can provide the document under protest. Mr. Murali says, we have one e-way case at UP with temporary GST number by mobile store. Hence, we have to file GST appeal. Of course, if you want to contest, you have to file an appeal with the temporary GST number. Time limit for issuance of SCN is over for 1920. Time limit for 73 is over, but 74 is still not time barred. Notice under 74, if we are able to convert 73, can we go under amnesty scheme? Very, very good question, Mr. Ashwin. Now that is already there in the circular. We took it up. Yes. In my view, you can go under 128A. There is a circular to this effect, but you must go through the intricacies of this circular. This circular 237 and 238 are there. Scrapping, Mr. Shah says, okay, scrapping of 9610 is prospective. It is considered as transaction wise or pending proceeding wise. Needs to be further explained. Can Mr. Rajmohan says, can first appellate authority under GST take ground for passing of order which travels beyond SCN? Yes, of course. Section 75 is there. First authority must, in my view, take this stand if it is, suitably applied. But if they don't take, in my view, GSTAT would take this stand. Mr. Krishna Kulkarni, credit note are pending on IMS as we haven't received them yet. Once received and verified, we will accept and process them in the next 3B. Considering commercial process, not delay in our part, interest should not be levied for pending or rejected credit note by the recipient. Mr. Krishna, I am totally in agreement with you, but this is the feeler we are getting from the GST network or the council. So here, in my view, you are absolutely right. I am of the same view. If this interest issue comes up, we must, as a trade and industry, put up this issue or contest it. Mr. Roshan says how to tackle the issue of demand notice under 74 for RCM on payment of royalties to state government while taxpayer already paid liability on outward supply to overcome double tax. Revenue neutrality, right? There is an Honorable Apex Court judgment in the case of Jet Airways. Possibly that would apply to your case. Mr. Rajmohan says, is GST login for each state has to be created? Yes, state-wise. Mr. Vipin says, can we pre-deposit fees under appeal through electronic credit ledger? Yes. Mr. Vipin, as of now, the matter is more or less settled. I understand the department has gone to the Supreme Court, but as of now, it is settled. I think only in Bihar, in that Flipkart case, they have gone to the Supreme Court in that matter. But as of now, that position is there. Apropos the various decisions of High Court, even a circular to this effect is there. Yeah. So Ms. Shreya Jain says instead of taking submission of 1A to be issued before SCN 74, can we take submission that scrutiny ASMT 10 is mandatory? See, you have to see your case. Scrutiny, in my view, is not mandatory. If there is, so SCN, pre-SCN can be issued directly, in my view. Good point. Yes, you can take this point that at least first tell me what I have to do. But whether it is mandatory or not before pre-SCN, that needs to be further dealt with on the basis of the case. If we, Mr. Joshi says, if we have IGST credit on import, TR6 don't want to utilize it, how can it be done on the portal? So I have answered this. Ms. Usha says whether EO membership paid for foreign entity and later company reimburses to director and invoice issued in the name of the director, company name is mentioned, whether this will be treated as import of service, can be treated as reimbursement. So what is EO membership? There is a membership, there is an import of services on which a company name is mentioned and director pays, right? Yes, it will come. If the invoice is in the name of the company, then of course RCM would be applicable if it falls within import of services. DRC 13 issued by Audit 4.4 Bangalore Division for Bank Attachment. So as I have discussed, Mr. Manoj, yes, you must contest this on merit, but section 161 and section 107 for appeal, that is mutually exclusive. You must immediately file the appeal before the appellate authority with the condonation if that be the case. Mr. Shahrukh Khan says we have taken input IGST on imports in the month of April, bill of entry 3B itself, but 2B not reflected in the month of May, and date of confirming bill of entry in April. Still received notice from department asking to pay interest for taking interest. No. See, the bill of entry is the evidence of duty. If you have the bill of entry and it only reflected in the portal after 1 month, no question of interest. In my view, this is not the right position of law which the department is taking. You can contest this. Section 74A pertain to wrong ITC or suppression of facts, where suppression includes non-disclosure of information in return. This effectively allows the show cause notice even for unintentional manual errors. Furthermore, while Section 50 mandates interest only on utilization of ITC, Section 74A extend to situation involving wrong availment regardless of utilization. Kindly clarify your views on this interpretation. Yeah, very good question, Mr. Sandeep Thakur. Yes, it talks about wrong availment and not utilization. But it is a fact that if a fraud is proved for availment itself, that is a point. But of course, if it is not utilized, you can contest, right, appropriately. But if Section 74 is involved and there is a admittance in a genuine case, then I would say the penalty would be applicable. Mr. Bharat says, preparing for hard locking, does this mean, okay, IMS will become mandatory from August? No, IMS will not become mandatory. Hard locking will become mandatory. Mr. Paul says, goods lost, so goods sold on loss as scheme discount. Oh, from suppliers as commercial credit notes. Should I reverse the ITC? Absolutely not, Mr. Paul. We are taking this up before the council. It is in discussion. Also, this circular 92. You can see circular 92 of 2019. No question of reversal of ITC for this post-sale discount. You can go through the Honorable Madras High Court judgment in the case of Supreme Paradise also in this case. Mr. Bhattacharya says, based on contest from taxpayer, can department amend their notice from 74 to 73 or we wait to appeal to the tribunal? Yes, department can always amend from 74 to 73. If they don't amend, we have to go to the higher authority. Mr. Prakhar says, sir, can department levy penalty under 125 by invoking 74 without any tax related? No. In my view, this is not the right position. If you invoke 74, where is the question of 125? Mr. Banerjee says GSTAT application 3 months time counted from which date? It will be notified from the date when the president enters the office. That date, 6th March 2024, not 25, that is a different date when the oath was taken. Mr. Paul says ADT2 received Section 65 audit. After that, SCN or notice possible? Yes. SCN ADT2, if it is issued, then that will come into effect, right? For DRC 1A. In my view, after ADT2 is there, then DRC 1 can be issued directly. Mr. Ankit says wrongly invoice made and credit note passed against invoice. Invoice made both, but customer rejects. So in case we are not report both, even though e-invoice made in this, because if report, then customer reject and our liability increases. What do? We have discussed this, Mr. Ankit, at detail. As of now, the only solution is to amend your invoice to 0. Mr. Vijaykant says PMT 9 between GST number and same PAN number. Yes, of course. Mr. Vijaykant says tax amount unable to transfer. Currently not. So this, Mr. Vijaykant, we have to see. As of now, I think PMT 9 is working fine. In case of hard locking GSTR 3B, is there any negative liability due to credit note value? Will it be taken care and how such negative liability will be adjusted? So now credit note liability negative value can also be reported in 3B. Very recently amendment has come, can be taken forward in 3B. What if credit note rejected by customer in IMS later ready to accept? Yeah, this is a very good question. If the customer rejects one, I don't think it can be reiterated. You have to reissue the credit note. Now that interest again becomes an issue. Ms. Amita says section 65 notice received for 1819. So this we have discussed. Can tribunal condone beyond 3 months? As of now, the power is not there, but going forward, jurisprudence will evolve, in my view, in this case. Can tribunal appeal fee be paid by credit ledger? Oh, this is a good question. I will park this question. You know, in my view, as of now, appeal fee for tribunal can be paid by credit ledger, but I will still park this question. This is a very good question. You know, as and when this tribunal, we go forward, more and more, such issues will come up, which will be clarified. Mr. Ashish Sharma says excess notice is received, but fact is in the last year in 99C, we have declared ITC taken in the next year. Then can they ask any details of last year ITC? Yes, of course. 99C, you have to show where you have taken, you have disclosed it ITC. Mr. Rajmohan says, can department dispute the valuation of the goods only before the goods are sold before cost in unrelated party transaction and GST below cost in unrelated party transaction and GST is paid on transaction value? Absolutely no. Very good question, Mr. Rajmohan. In my view, section 15 valuation is very clear. It is on transaction value only if department can prove that there is another consideration in addition to the price which is being reflected, or if the parties are related, only then they can invoke this valuation issue. But in case of unrelated party transaction, otherwise they cannot invoke this valuation and dispute the valuation. So I have completed all the questions. Again, thank you very much for attending this webinar. Thank you very much to the entire team. Over to you, Samir.
Thank you, Vivek. Thank you for this detailed session, and thank you everyone for joining this session. We really appreciate you taking time, and we hope that you found this session valuable and it is useful to us. It has been pleasure to have you here, and we look forward to welcoming you in the next session. Most probably when we'll have this council meeting next month, then we'll have a session post that, and we will hope to see you there. So with this, we close this session. Thank you, Vivek, and thank you, everyone. Over to you, Deepa, for this closing remarks.
Thank you, Samir sir. I would like to thank Vivek sir for this wonderful deliberation. Thank you, Samir sir, again from VILGST for coordinating with us. Thank you all for the participants for attending the webinar. We conduct such webinars every month, and we hope we will get you in the upcoming webinars as well. We will shortly share the PPT and video link to all the participants. Thank you all once again.